Hello everybody, welcome to my channel. Today I'll be talking about EncoreWire. EncoreWire, this is a company specialized in copper cables, copper rods and everything like that. They also do recycling in copper, which is actually very trendy these days. Why do I speak about this company? Because it's falling into the too cheap to ignore bucket, and also the fact that copper has some tailwinds over the next few years, even though the recession might be a headwind. But I think the tailwind will overcome this little headwind. Price target today around 140. I think the video now is 150, but the price target for me is between 200 and 250 by next year, and I will explain you why. Okay, so here this is really like a quick history of the company. So they started building plant over years, and this is pure organic growth that you will see for this company. There is no inorganic growth. They just recently, this quarter, opened the plant number 7, and which is located exactly on the same location. Everything is centralized, and this is what I really like in this company. Different application, as you can see. The main new ones that might come is the green energy business. So, for example, wind turbines, electrical vehicles. So this is quite trendy these days. And this is why I think we're going to see very interesting years ahead for the copper industry. Also, as you can see, is that the demand, for example, bear demand and bull demand is actually around 25 to 35 million tons per year, I think. And basically the supply, the mine supply, is actually maybe 60% only of what we need. So there was going to be a big game, let's say, game into copper recycling, which EncoreWire is very involved into. For the DNA card, so this is summarizing the entire metrics. I made it, and so that you can really have all the information on one page. This is actually one of the most important. What we look at first in the balance sheet, how much cash they have, around 1 billion, cash and equivalent plus receivables, absolutely zero debt, that's very good, and some assets, around $500 million also. Over the last few years, since 2021, they've generated a lot of operating cash flow, around $410 million of operating cash flow, and then they are planning for around 700 million for this year. They did also a lot of buyback, around 12% buyback for this last, let's say, 3 years, and they are still planning to do so. Their gross margin at the moment is very healthy regarding the supply chain issue from Russia and the demand that is still high, and the copper price that is around, let's say, $4.2 at the moment, which was supposed to decrease but never get normalized. And as long as this is like this, the company will print a lot of cash, and this is what I like. I like to see. Okay. So for now, if you do a market cap 2.6 billion minus 1 billion of, let's say, cash, the enterprise value is around $1.5 billion. They generate, let's say, over the trailing 12 months, $700 million, which give you basically like something around like 50% yield on a free cash flow to EV ratio, which is amazing, meaning that if they continue like this for the next 2 years, they can buy back all the shares of the company. So there's a big upside potential, even though this configuration might not last forever. The return earnings are actually are crazy, like $2 billion. So it means that they generated a lot of money over the last decades. So it's a profitable company and very well, let's say, led by the executive. Now let's go for the model. So what I'm going to do is I'm going to skip this one. I'm going to go directly into this valuation. So the revenue for 2023, I will just make an estimation for the entire year of 2023. So I consider the same revenue as 2022 because they have not provided any guidance yet. So I consider that the growth is flat, even though they are going to have a new plant that's going to be available and that's going to probably generate more revenue. So $2.9 billion for the revenue for 2023. I consider a big cut for gross margin, which actually at the moment like at 39%. I consider it that overall it will be only 21% gross margin. So a big cut from 35 to 21. It will still give the company a gross profit of 609 million. Now I consider the OPEX. So wait. The OPEX, where's the OPEX? The OPEX I consider $200 million, so same as 2022. So this minus that give you around $400 million, and I remove 25% of income tax. So the net income after tax will be around $300 million. If you divide by the number of shares, it will give you an EPS, earning per share, of 17.5. I add a PE of 8, which is very conservative, I think, for a company that is well run, that has no debt, and that has still like a good future ahead. And it will give you a share price of $140 US. Obviously today we are already at 145, so there's no big additional benefit. But don't forget to add the cash that the company has into their pocket, which is around $1 billion. And this is an extra $57 that you have to add on top of this share price estimation. So that's the reason why I consider that the price target here for a conservative PE of 8 will be around $200 US. Now, if we go on the, let's say, less conservative, I consider a PE of 10. So same EPS multiplied by 10 give you 175 USD, plus the $57 of cash will give you a price target of $232 US. So around 230, say 250. That's the reason why I can put that on the trend and target, so that for accountability in the next, let's say, year, whenever we debrief about this analysis, to see if this target window is hit or not, between 200 and 250 that I put just for January 2024. So compound annual growth rate for $200 would be 43% and 80% if it reached the top end of this target. So just on a conclusion, the company is very profitable, has a very clean balance sheet, a lot of cash. This is exactly what you need in terms of recession when the interest rates are high. So that's very good. A great yield. So here it's wrong. It's like a P of a free cash flow to EV of 50%, which is a strong floor for the share price. They still have their buyback program in place. So if the stock goes lower, it will obviously, the company will start buying back some shares. The tight copper market leading to high copper price due to Russian metal shortage, and that gives a bit of pricing power for the Encore wire, which will maintain very good growth margins. The execution team has been showing great. If you look at their presentations, their conference calls, it's absolutely stunning. So this is exactly what you need. Lots of receivable, obviously, that will still transform into cash, around $500 million. And then still a light capex investment over the next 2 years, because they don't invest more than 160 million next year and 90 million in 2024. So obviously they upgraded their plant number 7 last year, 2022. So they don't expect to do a big maintenance investment or capex investment over the next few years. So that's very good. Also, the organic growth is the main driver for this company, and they have not done any acquisition, and they obviously just opened plant number 7 that is not fully ramped up yet. Obviously, there's still some tailwinds that coming for the next few years: EV production, green energy industry that require a lot of copper rods, and the company is into recycling copper, which will be a big part of the game, considering that the supply will be insufficient. On the cons, obviously, this is possible recession and lower consumption, which will lead to a lower copper price and lower revenues. So this is something that you still need to monitor, especially the copper price. But overall, considering the configuration today and the fact that it's extremely cheap for the last year, and then that they are not having any copper price normalization, I think this company is really worth keeping an eye on, and that's the reason why I'm invested into this company. For information, I'm not financial advisor, so please do your own research before doing anything. So that's it for me, a very short video, but at least I hope you enjoy, and I'll be making another one pretty soon. So see you, cheers, ciao.